Today, we're going to talk about economics, but we're going to make it personal. We're connecting those huge, sometimes intimidating ideas you hear about on the news and bringing them right down to your daily life, from your morning routine to your biggest goals. And it all kicks off with one simple question.
So think about it for a second. What do these things have in common? I mean, your job is how you make a living. Your phone, well, that's your connection to pretty much everything. And your home is probably the biggest thing you'll ever own. They all seem so different, but they're all tied together by this one powerful and, yeah, often invisible force.
That's the one, economics. Every single one of these things, and almost every single choice you make all day long, is an economic decision. It's all influenced by these big systems and ideas that have been built up over hundreds of years.
So, to really get a handle on your own financial life, we first have to understand the world you're operating in. Let's dig into the basic building blocks of the whole system.
For most of us, this is the system we live and breathe every day. It's not like there's some central committee deciding what gets made or what things cost. Nope, it's all shaped by countless individual choices that you, me, and everyone else makes as buyers and sellers.
And the engine that makes this whole system run, it's this idea right here, private property. The very fact that you can truly own something, your car, your computer, your house, that's what makes it all work. Without the right to own and trade stuff, the whole idea of capitalism just falls apart.
Okay, so to create literally anything of value, whether it's a brand new car or just a cup of coffee, you need a mix of these three things. You need land, and that means all the natural resources, the raw materials. You need labor, which is us, the human brain power and effort. And you need capital. Those are the tools, the machines, the factories that get the job done.
Okay, let's bring it all back to you again. The most direct, obvious way you take part in this whole economy is through your job. So let's talk about how earning a living is really the first chapter of your financial story.
Your typical 9-to-5 job didn't just pop up out of thin air. You can trace its DNA all the way back through history. It started with ideas like Adam Smith's division of labor, then got supercharged by the rise of factories, and it continues to evolve with modern laws that protect workers' rights.
This was a total game changer. Think about it. Instead of one expert craftsman making one whole thing from start to finish, you could have different workers specializing in making just one part. That idea of interchangeable parts and assembly lines meant we could make things way faster and more consistently than ever before. It's a principle we still see in everything, from building cars to making your lunch.
So, you did the work, you put in the hours, and you've got your paycheck. Awesome. But as we all know all too well, you don't get to keep every single penny. A piece of it has to go back into the system that, keeps everything running.
Yep, a good chunk of that paycheck goes to the government. Most of it comes from income and Social Security taxes. But there are other kinds too, like excise taxes on stuff like gas or plane tickets. And all that money comes together to pay for everything from highways to hospitals to national security.
So how do they decide how much tax you owe? Well, in the US, the system is built on this idea of a progressive scale. It's actually a pretty simple concept. The more money you make, the higher the percentage of that money you pay in taxes.
All right, so you've earned your money, you've paid your taxes, and what's left over is your disposable income. This is where you get to be the director of your own little corner of the economy. Every single time you tap your card or click that Buy Now button, you're basically casting a vote with your wallet.
So let's talk about the plastic in your wallet. They might all look the same, but they work very differently. A debit card is simple. It pulls money you already have right out of your bank account. A credit card, that's like a flexible loan. And a charge card is kind of a mix of the two. You have to pay off the whole balance every month.
So why do you pick one type of phone over another, or one soda over another? A lot of the time, the answer is branding. And let me tell you, this is an incredibly powerful economic force. Companies spend billions of dollars just to build a relationship with you, to create this feeling of trust and quality, so that when you're in the store, you reach for their product without even thinking about it.
Okay, beyond the little everyday purchases, we all run into these huge financial moments, the ones that can really define our lives for years to come. So let's break down a few of these big ones.
Insurance can feel so abstract, at least until you actually need it. The key thing to understand is the deductible. Just think of it as your share of the risk. If something bad happens, you agree to cover a smaller, set amount first, like $500. After you've paid that, the insurance company steps in to handle the rest of the big, scary costs.
For a lot of people, owning a home is a huge life goal. And that idea has really deep roots in history, from Thomas Jefferson's vision of a nation of landowners to the boom in suburban homes after World War II, all the way to the ups and downs of the market we see today, which are often driven by interest rates.
Now, with big purchases like houses and cars, often comes big debt. Just look at this number. By 2005, Americans owed $750 billion just on their credit cards. It's a massive, staggering figure, and it really shows you how important credit has become in our financial lives.
So what happens when debt starts to feel overwhelming? What can you do? Well, one common strategy people use is called debt consolidation. The whole point is to make your life simpler. You take out one new, bigger loan to pay off a bunch of smaller debts. Ideally, that new loan has a lower interest rate, saving you money in the long run. Okay, so up to this point, we've mostly been focused on you and your individual choices. But now we've got to zoom way, way out, because all of this stuff is happening inside a much larger system shaped by forces that can feel totally out of our hands.
Do you ever get that feeling that your money just doesn't stretch as far as it used to? That, my friends, is inflation. So if the inflation rate is, say, 4%, it means that the $50 you spend on groceries last year will only get you about $48 worth of the same stuff this year. Your money has literally lost some of its power. So to steer the economy and manage big forces like inflation, the people in charge have two main toolkits. On one hand, you have the government, using what's called fiscal policy. That's things like adjusting government spending or changing taxes. And on the other hand, you have the country's central bank, the Fed, using monetary policy, which is all about tweaking interest rates and the money supply.
And all of this brings us to the final big question. We are all players in this enormous economic game, right? We're influenced by history, by policy, by things happening on the other side of the world. And while understanding all these forces doesn't give you complete control, it does give you power. It empowers you to make smarter, more informed choices. Because at the end of the day, you can't win the game if you don't know the rules.